Good morning, everyone. Looking at the US stock markets, the Dow has again breached towards the high of 26,600 points level. Since then, we did see a renewed weakness on the US stock markets as the Dow tripped below the 26,000 psychological level. Following that, the selling pressure was noted as the Dow continues to trend lower just towards the EMA 120 or the 23,000 points. After 1 day of recovery, we did see the renewed volatility as kicking on the Dow Jones as the Dow continues to trend lower and subsequently closes below the EMA 120 level and also the 24,000 psychological level as well. So moving forward, we might see further downside on the Dow Jones towards the 23,200 points level to see how it holds there. If the 23,200 points level cannot hold, then we might see further correction on the Dow Jones towards its next support located at the 22,300 points level. In the meantime, any upside for now will be just capped towards 5,000 cycle level on the Dow Jones index. Similarly, on the S&P 500, we did see the S&P 500 has topped towards the 2870 level. Since then, the S&P 500 has staged a pullback below the 2800 psychological level. After violating below the 2800 psychological level, we did see the S&P 500 has seen a further pullback just towards the EMA 120. However, after 1 day of gain, we did see the renewed weakness coming in again as the S&P 500 has crossed below the 2600 psychological level as well. So following the valuation below the 2600, we might see further pullback for the S&P 500 towards its next support located at the 2550 level. That will be the key support level for now. If the 2550 level cannot hold, further pullback will be seen towards the 2500 psychological level on the S&P 500. In the meantime, any gains for now will be just taken as a technical rebound towards the 2700 psychological level. So gains will be just limited towards the 2700 with weakness towards the 2550 and also the 2500 psychological level. Following this short-term pattern, we did see that both the S&P 500 and also the Dow Jones Index has been forming the lower high and also the potentially the lower low formation, implying that there's potentially a reversal pattern. And both the indices has also been on the corrective phase, following more than 10% of downside from their all-time high level. On the crude prices, it has earlier been trading on a sideways pattern between the 63 towards the 67 US dollars barrel on level. Since then, we did see the crude prices has seen some of the renewed weakness at its falls below the 63 US dollars barrel level, and the follow-through selling pressure was noted on yesterday as well. Following the violation below the 63, we might see further pullback on the crude prices towards the 60. And if the 60 cannot hold, further pullback will be seen towards the 55 or 56 US dollars barrel level. In the meantime, any gains for now will be just capped towards the 63 US dollars barrel level. The weakness came in amid the global decline in commodity prices and also the renewed strength in US dollar against the basket of currencies. Okay, some updates on the local front. FMKLCI has trended towards the recent peak of 1870 level. Since then, there's no follow-through buying interest. Instead, the FMKLCI has pulled back alongside with the rout in global equities as it forms some of the good recovery pattern on top of the EMA 60 or the 1800 psychological level. After recovering from the 1800 over the past 2 days, we might see further weakness on the FMKLCI. Should the key index falls below the 1830 level today, we might see further pullback on the FMKLCI towards the 1800 psychological level. In the meantime, if the FMKLCI could see some of the gains over the near term, any gains will be just capped following the next pullback. Any gains will be just capped towards the 1830 level on the FMKLCI for now. Everything is still quite weak on the FMKLCI right now. As you can see that the MACD has really issued a sell signal and is still pointing lower, whereas the RSI has a trip below the 50. Yes, recovered above the 50, but we might see the the RSI tripping back below the 50 level, at least for today. On the lower liners wise, the FM small cap index has seen a breach above the 18,000 psychological level. Since then, there's no follow through buying interest. Instead, the lower liners continue to trend lower towards the 17,300 points. It staged a mild technical recovery towards the 17,550 points level, and following that, we did see the pullback coming in. After a hammer candle on the 6th of February, we did see FM small cap has lingered below the 16,400 points level. However, given the recent volatility in Wall Street, we might see further pullback on the FM small cap index towards its next support of 15,680 points level on the FM small cap index. All in all, over the short-term period, FM small cap index is forming the lower high and also the lower low formation, implying that this could be the renewed downtrend or renewed pullback on the SPM small cap index. Some of the stocks that we can watch out for, one of it is MHB. MHB, we did mention that there's a symmetrical triangle formation breakout above the 82.5 cents level, and subsequently it has hit our target price of 98 cents. After touching the 98 cents level, we did see MHB has pulled back again, forming a good hammer candle on top of the 71 cents level. After touching the 71 cents intraday low, we did see MHB has formed a good 2-day recovery pattern accompanied by some of the rising volumes. So following this breakout above the 82.5 cents level, we might see further upside for MHB, firstly towards the first target price of 92.5 cents and subsequently towards the 98 cents level. Your stop loss point will be located below the recent low, which is around the 77.5 cents level for MHB. For Supermax, price has continued to trend higher, again forming the higher high and also the higher low of formation. After touching the recent peak of around the 251.50 cents level, we did see Supermax has pulled back. The pullback came in without significant volumes, implying that the buyers during this period of time is still remain very much intact in position on Supermax. After the recent pullback towards the EMA 120 or the 1 ringgit and 99 cents level, we did see a recovery pattern over the past 2 trading days on Supermax itself. On the indicators wise, the MACD histogram has already turned green, but just the RSI is still below the 50 level for now. So for Supermax, what we need to do is we're going to see if there's any follow-through buy interest above the 2.33 cents level. If there's a follow-through buy interest above that, then we can confirm that the recovery pattern could be forming for Supermax towards the 250. That will be the first price for now, and subsequently towards the 2.58 cents level. Your stop loss point will be located below the 1.99 cents if the breakout above the 2.33 cents level for Supermax. For HSS EB, price has hit the intraday high of the 1.77 or 78 cents level. After touching that, we did see HSS EB has staged a pullback, forming a hammer candle on top of the EMA 60 or the 1.40 cents, and subsequently form a mild 2-day recovery pattern. So for HSS EB, we are going to monitor to see if there's any follow-through buy interest above this breakout on top of the 1.65 cents level. If we can see this short-term breakout above the 165, then we can trade HSS EB towards the first target price of 178, which is also the all-time high, and subsequently towards the 1.85 cents level. Your stop loss point will be located below the 1.56 cents level if there's a breakout above the 1.65 cents level for HSS EB. Everything is still quite positive on HSS EB right now, as you can see that there's no bearish divergence on the MACD indicator, whereas the MACD histogram has already turned green at yesterday, while the RSI has been flirting above the 50 level over the past 1.5 months trading period. Last 2 companies for today will be ENO firstly. Just give me a minute for the chart to load. And in the meantime, if you have any questions, you can put in your chat box and I'll reply you shortly. E&O has is still on the downtrend phase. It has pulled back towards the recent of 1.35 cents a level. After touching the 1.35 cents, we did see a potential bullish divergence signal as price has been trading lower, but the MACD indicator has been trending higher throughout this period of time. Following this bullish divergence signal, we did see E&O has staged just a mild recovery pattern just towards the EMA 120. It rejected the EMA 120 level and subsequently pulled back. However, we did see some of the rising volumes being accumulated on E&O again over the past 2 to 3 trading days as price formed a good bullish candle and subsequently closed above the EMA 20 level as well. With that, we are going to monitor for this breakout above the 1.45 cents level. Upon the breakout of 1.45 cents, we can trade E&O just for technical recovery towards the 156 and subsequently towards the 1.66 cents level. Your stop loss point will be located below the 1.37 cents level for E&O. Last company for today is Euro. Euro Holdings has pulled back from the recent peak of 27 cents towards the 15 cents level. After touching the 15 cents, price has staged a healthy consolidation over the past 2 months period between the 15 cents and so the 17 cents level. However, we did note that some of the accumulation is taking place on Euro and price subsequently breached above the 17 cents level and also closing above the EMA 120 level. Following the breakout above the 17 cents, any pullback for now will be a healthy pullback for us to accumulate before the next uptrend to resume towards the first target price of 19.5 cents and subsequently towards the 21 cents level. Your stop loss point will be located below the 15 cents if there's any pullback for us to accumulate. If you have any questions, you can put in the chat box. I'll reply you shortly. And just to repeat again, the market is still very weak at current moment. So should any stocks falls below their support level, it's best to immediately cut loss in order to protect your trading capital. If there's no question for today, then we'll end the morning briefing. Thank you.